Hey guys, welcome back. We have a bit of a painful video this time, but I do think it's extremely important to make videos like this as well. I've committed with this channel to not hiding my failures and my mistakes. I want to be as open as possible. So I'll share my successes with you as well as my failures. And this is one that definitely didn't turn out well for me. And when you have a stock that's performed extremely poorly, you have to make the decision, do I still believe in this company? Do I still believe in the thesis and the management? Do I want to hold it and even average down and buy more? Or was I wrong? Has the story changed? Should I get out and redeploy that money elsewhere? Don't get stuck in the sunk cost fallacy where just because you're down, you refuse to sell. I mean, if you really believe that money could be doing more somewhere else, then obviously you should do that. Take the loss. That loss can actually be useful. You can put it against your capital gains so that you're paying less taxes for the year going forward. So today I want to talk to you about Zillow. It's a company I got into. I'll go into the reasons in a minute. A lot of it had to do, unfortunately, with FOMO, relying on other people's analysis, not doing enough of my own research. Really a recurring theme I'm finding for every mistake I have made has a lot to do with FOMOing into a stock. But let's hop into it and analyze what went wrong here, see what we can learn from this case study. Okay, guys, here it is. This is my position in Zillow. As I've said, I'm not going to hide anything from you guys. It's down huge. Obviously, we have 69 shares. Cost basis of $127.48 per share. Current share price is $42.50. So basically an absolute disaster here. We're looking at about $3,000 a share. Cost basis was closer to $9,000. So clearly not what you want to see. And let's go over how this happened, what we can learn for it, and why I've decided to pull my money out of Zillow going forward. So rewinding the clock here, we're going back to April of 2020 now. This is a couple years ago. I had been keeping my eye on Zillow for a while. I thought it was an interesting company, interesting thesis. For those of you who don't know, they run a really big real estate website, working with real estate agents and things like that. But the big disruption, the big idea was that they were going to disrupt the real estate industry, try to basically cut out real estate agents, which is massive thousands and thousands of dollars of fees, make the home buying and selling process much more streamlined for you. You just buy a home at the set price, don't worry about agents, open houses, all this crazy stuff, all this extra work and overhead. A lot of people thought the real estate industry was ripe for disruption. We've had disruption in so many other industries. Real estate industry really hadn't changed too much. So Zillow launched this iBuying platform where they're buying houses and then just reselling them to people, basically trying to cut out the real estate agents. They just have algorithms calculate the value of a home and then buy it and then sell it again to someone else and make their money by cutting out a lot of the overhead, a lot of the commissions and things of that nature. So I thought it was an interesting company. And here we are, April to July. I'm kind of watching it and it's going up, right? So it's around $25 per share. I'm watching it. 4 months go by. It's now up around $60 per share. And I'm like, oh my God, I just missed out on like a triple, right? Like, I've been watching it and if I had bought it, I would have had a triple already. And I can't believe I missed this. So obviously I don't pull the trigger, but I keep watching. What happens next? Well, we go to September and now we've gone all the way up to probably in the 80s. So we've gone now from $25 per share to, let's say, $80 a share, which is almost a 4x, right? Like, oh, I can't believe I've missed out on this. So frustrating, but I still find it an interesting company. Let's keep watching. Well, what happens next? December rolls along and we're now above $100 a share. We're probably at 110. We peaked close to 120. before dropping a little bit, but still like insane returns to go from say $25-$30 a share to over 100. Like that's a massive home run for any investor. Still haven't pulled the trigger quite yet. Let's see what happens next. Okay. Unbelievable, right? Like, I can't believe I've missed out on this. I've been watching it the whole time. I'm missing out on amazing returns here. We've now gone from $30 all the way up to $150 a share. Like, oh my God, so much money has been made by investors in this company, and I'm missing out on it. So frustrating. And now what happens? Something that finally gets me to pull the trigger is I see a video by Gene Munster and Loop Ventures, who is a great investor I really respect. He invests in a lot of disruptive tech companies, big into Tesla and a few others. And then I see this video come out. Let's watch it.
Loop's announcement today that we are investors in Zillow and Opendoor. And the headline is that iBuying, buying homes online, is going to transform the residential retail market. And before I give a jump ball to both Will and Doug, an observation here is that these two companies, the valuations have been up a lot lately. If you look at Zillow over the last, well, Zillow and Opendoor, they're up 2-3x plus over the last 9 months. And right now, Zillow now approaching $35 to $40 billion valuation. Opendoor at a $15 billion valuation. Just a really high level. Is given the moves that these two companies have had, why do you put the stake in the ground now?
Ultimate first, and then Doug, you can elaborate. I think the why now question is basically answered with, when you find a market like this, don't try and get cute with it, and don't try and time it, because it's going to be a long-term deal.
Okay, so what happens next, guys? Well, things are actually looking pretty great for a little while here. You can see I bought in around $120 odd, and we go all the way up to 200. I mean, this is just exponential returns here. You've multiplied your money 7 times. You've 7x'd your money. Like, this is a once in a decade home run that people have made. I mean, if they're selling at this point, right? So, it's party time. Things are good. People are talking about how Zillow's going to disrupt real estate. Gene's on board. A lot of disruptive investors are on board. Kathy Woods of the world. Interest rates are low. Macro markets are good. Everything is great. Let's keep watching. Well, that didn't go too well, did it? We are crashing back down to about $80 a share. So, I mean, okay, I say to myself, things were getting a little overheated there. We've dropped down. You know, it's not good, but the iBuying thesis is still intact. We're still going to disrupt the real estate market. Surely this is the bottom, right? Nothing else can go wrong.
So let's talk about exiting the Zillow Homes business and the home flipping, as we just described it as. Is this a sort of full-scale admission that you should never have gone into that business line in the first place?
It was a really tough but necessary decision, Wilfred. And I guess first and foremost, the decision to wind down our Zillow Offers iBuying operation involves a layoff of about 25% of the workforce. And that is a heavy thing. We just determined that being an iBuyer was too risky, too volatile, and ultimately addressed too few customers, too narrow.
Son of a... Okay, and now you can see very clearly where they announced they're exiting iBuying, and the thesis is over. We're not disrupting the real estate industry. Sure, we're running a nice website. Real estate agents are using it. It's a very big website, a lot of traffic, but we're no longer taking over. We're no longer capturing those commissions that used to be going to the real estate agents. We gave up, and we're just going to run a website going forward. So we have this absolute crash from around $100 a share down to about 60, and it's not done there, right? We keep going down. Where are we now? We're in the 40s. Like, oh my God. So we've gone from $200+ a share back down to 40. So if you were holding it this entire time up and down, like you didn't get off the roller coaster at the top, you waited to the bottom again. I guess you did okay still, but like me, I bought it in the 120s. And it's just extremely painful. And now the thesis isn't even intact anymore, right? Like, this isn't the reason I invested. I didn't want to just buy a real estate business. I wanted to buy a disruptive tech company that was changing real estate forever, which is no longer in the cards. So where does that leave us today? Well, I have to decide, do I still believe in this company? Do I want to buy more stock? Do I want to continue to hold? Ultimately, there could be some upside from here if you just believe in their Zillow website business minus the iBuying. But as I said, that wasn't my thesis. That's not why I was interested in the company. And I just have higher conviction in other companies at this point. Like, do I still believe in this CEO? He took this massive swing on iBuying, had to lay off a quarter of his company because it didn't work out. And I just don't think I believe in them anymore, really. And I still have extremely high conviction in Tesla and some other companies. So I think I'm just going to take the loss on this one. It's a painful lesson, but what have we learned? It's a painful lesson for us, but no investor is perfect. I've never claimed to be perfect. I've promised not to hide my mistakes from you guys. I want to learn from my mistakes, which is one of the reasons we're making this video. So what can we take from it? Well, number one is FOMO, fear of missing out. Just watching a stock go up and up and up and just wanting to be a part of it and just being afraid that it's going to continue and you're going to miss out on it. I don't know how many times I've made this mistake, but probably quite a few. It's probably part of a lot of the mistakes I have made in the past. One factor in them has been FOMO. So number one, don't FOMO into a stock just because it's gone up a lot and you don't want to miss out on the party continuing. And then, of course, we saw the video from Gene and we bought in without doing much of our own research. We just basically believed in him. And he is a good investor. I'm not saying, he isn't. Even good investors are wrong sometimes. And you want to do your own research and have your own conviction in a company instead of just basing it on someone else, which we didn't do back then. We just kind of said, oh my God, I don't want to miss out on this. Gene's in. Okay, fine. I'll put in some money. Didn't work out. So number two is always do your own research. Make sure you have your own conviction in the company, not just following someone else blindly. And what we're going to do now is we're going to take our capital loss. We have plenty of capital gains to put that against for the coming tax year. So we'll have to pay less taxes, which is nice. We'll put that money into one of our high conviction names just because I don't have conviction in Zillow anymore. Like, what's the end game here? We're just maybe we'll run a nice website. We'll do okay. But that's not really what I'm all about. So probably put the money into Tesla because, they just had amazing quarterly results and the stocks barely moved, mostly because of the macro markets, I think. They're still held up better than a lot of the growth stocks, but I feel like there's some upside there still, and I would like to grow my Tesla position. Also, I think I've just over-diversified into too many stocks. I've just thought like, oh, that's interesting. Zillow's interesting. Corsair's interesting. Tattooed Chef's interesting. And I'm going to talk about way more. So I'd like to pare back the number of companies I'm interested in. That way I can have a deeper knowledge of each and every one of them. Whereas if you're buying so many companies, you're just spread so thin, you can't track all of them as closely as you really should. Another reason I think I'm going to get out of Zillow. So painful lesson, guys. One I hope I've learned from, and I'm not going to just FOMO into something again anytime soon. We did lose probably $5,000 plus. So definitely not nice, but something we can learn from. make us an better investor going forward. And yeah, we'll just move on from it. So let me know down in the comments, do you hold Zillow? Have you held it in the past? What do you think of the business? What are you doing with your shares? If you have any, what do you think fair value is for them? Any other comments? Let's continue the discussion down below. Please consider liking and subscribing, guys. It'll really help the channel, and I appreciate every subscriber so much. Thank you guys for watching, and I'll see you next time.